The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good day, folks. Steve Rhodes coming to you. Welcome to the September 9th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm recording this. It's now 8:06 in the morning. So for the next half hour, you'll hear my voice. And then to complete the hour session, Tommy will go ahead and take over. I will be off for the rest of the week, so we'll return on Monday. So let's get right to it. We'll try to make today's show as pertinent as we can for the 1 o'clock hour. So if you're listening live, thanks so much for doing that. Right now, as we take a look at the markets, 8:07 a.m., U.S. equity futures are all pointed higher. The Dow is up 183, about 0.7%. The NASDAQ is where we'll spend some of our time this morning, up 1.6%, 176 points to the upside. The S&P is up 30 points. The Russell's up about 9. Overseas last night in Asia, everything finished to the downside. The Shanghai was off 64 points. The Hang Seng down 155. Now, the Hang Seng has got a valid TD9 count bottom pattern. And either was the low of yesterday or the low of tomorrow's session that could be the bottom there. Based upon the way U.S. equity futures trade today, or the equity markets trade today, you'll have a pretty good idea as to what the intent of the Hang Seng would be should you wish to trade that. So it's got a valid bottoming signal there. The Nikkei down 241 points, and the Australian S&P down 129, about 2% to the downside. Over in Europe this morning, the DAX is trading higher, up a little over 1%, 148 points. FTSE up 57. Gold's off $9, silver down 23 pennies out there, and the U.S. dollar index up 169 pips, trading out at 93.61. So what are the markets doing? Good question. The markets, we'll call it the core markets, are each doing the same thing. Now, here's what you're going to expect. You're going to expect, at a minimum, today's Wednesday, a bounce into Friday. At least a bounce into Friday. Now, I'm going to give you the numbers so that you'll be able to make that determination whether that's going to come to fruition or not. Now, here's what we want to first do. Well, for you and I, it's always about just a handful of things, and less than a handful of things. It's all about support and resistance. Can we call that one or two things? Doesn't matter to me. It's all about support and resistance, understand where those levels are, and it's understanding the top and bottoming signals that are present at not all, but at a majority of tops and bottoms out there. So let's begin by taking a look at support, because that's what each of the markets, well, I say each of the markets, 3 of the 4, the ES, the NQ, and the Dow, have each pulled back to support. Now, there's different support levels that we use. We use the following. We use TAS market profiles. They're not shown on this chart here. We use Stevie's green line. That's more of a shorter term type tool to help us understand what's going on. That's that green squiggly line right now, priced at about 34.81. And then we use our TD9 counts to help us identify where a market breaks out and breaks down. What markets like to do, doesn't matter what time frame, as they move higher, they then like to pull back. When they do pull back, is pull back and test levels of support. Those levels of support are either going to be the TAS market profiles or the TD9 breakout levels. They can also be Stevie's green line. Well, in this case here, we can see that price has made its way all the way back to the 33.19 level. That was the TD9 breakout area for the ES Mini. This is where you would expect buyers to run in. This is the breakout area. Now, in this case here, the ultimate move higher into Friday would be getting up to 34.81. I'm not making that call right now. We have to go one step at a time. But that Stevie's green line, as price moves higher, that green line will move higher as well. As price moves lower, it moves lower. And there's more math to it than just that. But in essence, that would be the ultimate target to be able to sell into. But here's what you know about the ES Mini. It's got a confirmed nice A to B equals C to sell the D point, that big bear sash candle from a few trading sessions ago. But right now, support is held. That's in the ES Mini. So I'm going to stick with the ES Mini, and you're kind of getting a feel for newsletter charts out here. What takes place, and there's a whole slew of those. But let me come take a look at with you. We're going to take a look at the opening range. The opening range is really key. Look, you don't have to trade the futures, but if you're trading the indices, you need to have access to the futures data to be able to assist you with interpreting what the message of the markets is. The message of the markets for the ES mini, we can see here, let's just take a look at what it has or has not done. If you take a look at now on this chart here, this is my opening range chart. The opening range, what this is referencing, folks, is really 3 half-hour periods. When the U.S. Market reopens, that's at 6 o'clock in the evening, and that's by these two lines, these black lines. Sometimes it's hard to tell if they're black or blue or what have you, but that's the opening ranges last night. Back here you can see it's got bar number 7 listed on it. Prices above the U.S. opening range. Then we have the Asian opening range. That is identified by red horizontal lines on my screen. Well, prices above that. So we get to understand what traders are thinking for that first half-hour session as their markets open. Now, this would be the cash market inside of Asia. And then we have the cash market inside of Europe. And those are identified by the blue lines out here. When prices trade above all opening range levels, those are the 3 dominant opening range levels, then price is breaking out. It gives you direction for the day. So as long as price remains above 33.46.25, that's top of the European opening range, prices move higher. Now, move prior to where? This means you and I need to be able to identify resistance. Well, resistance is also its TD9 breakdown level, but this is now for the 30-minute time frame chart. We looked at the daily. We knew where the breakout level was. Now we're just coming down and taking a look more granular. We're taking a look at the short-term time frame charts. So the key level here is 33.7450. If you see 2 closes above that, 2 30-minute bar closes above 33.7450, strap on your boots and prepare for price to move to 24.2775. That's the next dashed green line out there. That would be the next TD9 count breakdown area. Nowhere near the, I'm sorry, did I say 24? I'm at 34.27. That's not close to the 34.81 level, but again, you got to take this step. Take this one step at a time. So 33.7450 is a real key level. Likewise, to the downside, 32.9550 is a real key level. If sellers come in, they push price, we get below the low of last evening's opening range out there, and because we know we'd be below, or I know we'd be below, you know we'd be below, the TD9 count on the daily, that spells real trouble ahead. But expect and anticipate a 2-day bounce. Now, you might ask the question, well, let me do the NQ first. Let's do the NQ, and then I'll come back to you might ask the question. Well, what would that question be? Well, we'll see if I can remember it. Let's take a look at the NQ out here, right? The NQ leading things to the downside, but leading things to the downside to where? To its TD9 breakout level, 11.094.25. 3 days ago, 4 days ago, 5 days ago, 6 days ago, 10 days ago. 10 days ago. If you would have said, now, would it have been 10 days ago? About 7 or 8. Yeah, it could have been 10 days ago. You would have said, where's the actual breakout level inside the NQ? If the NQ pulled back, where would I want to buy it, Steve-O? And the charts would have told you 11.094.25. Granted, price dipped below that. We're back above it. Its target to the upside would be headed towards 11.883. That is Stevie's green line out there. So that would be the ultimate area to, at this stage of the game, to sell into the market. We'll have to see what is transpiring should that occur. Now, inside the NQ, just like we did with the ES, we take a look at its opening range charts. We won't go through all the details. I'll just give you the number, 11.283.75. That is where price found resistance this morning. How important are these TD9 count, breakdown, and breakout levels? Folks, 2 closes above 11.283.75, and you're looking at 11.531.50 as the next stop on the train to the upside. And you've got to watch 10.935.25 to the downside. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 8:18 in the morning, recording the first half hour today. We'll be off the rest of the week, but back on Monday. Jay in the Den asked a great question as we were taking a look at the equity futures contracts. And his question was, what is the spot volatility index doing? Right now, trading lower. It's out at trading at 30.26, but it's still well above the 50-day exponential moving average line. That's at 26.56. The reason that 50-day exponential moving average line is so important is because of this. All you have to do is take a look at this chart and generally understand that when the yellow areas of this chart represent when the spot VIX index is above its 50-day EMA. Gives you a general feel for how the S&P 500 reacts versus the green areas when the spot VIX is below the 50-day EMA out there. Now, to put this in perspective, what should we expect from the VIX? Because that's really what the question that Jay was asking. What should we really expect from the VIX today? Well, let's take a look at the chart of the spot volatility index. Yesterday, completing a TD9 count pattern out there with bar number 9. Now, this chart here is not showing the movement this morning. We just took a look at that. But what we can see, Jay, is that Stevie's oscillator and change line, the red-green line out there, changed colors yesterday or the day before. When that occurs, there's a phenomena that takes place. I can't tell you why. Not because I can't tell you why, but because I can't tell you why. But I just know that it happens. It's very much like electricity. I can't tell you how it works, but man, do I know that it does work. Now, here's what we should anticipate in the spot volatility index. And you can kind of put this together with what we're looking at in the short-term time frame charts for the equity futures contracts. You've got the numbers to be watching today. Here, we should expect that the spot volatility index and price are going to test Stevie's green line. That's currently printing at 26.39. That's going to move perhaps a little bit higher or lower, what have you. But you're really looking for that test. If there's a test and rejection because the line is green, that's telling you the spot volatility index is ready to move higher. If price gets below that level, Stevie's green line, you could see a move back to 2092 where it actually broke out, the breakout of the TD9 pattern out there. But right now, things are setting up as they should. As they should. What do you mean as they should? What's this 2-day bounce stuff, Steve-O, that you talked about? Now, that's a great question out there. So let me go ahead. See, I did remember it. Let's go ahead and pull over the NQ chart out here. And as we take a look at the NQ chart, What I want you to notice out here, I want you to pay attention to on this here, I want you to pay attention to what's kind of referred to as a 2 to 4 bar knee-jerk reaction. Now, this is the NQ coming off of the March lows out here. And what I've got identified on here, you'll see that each of the pullbacks have been either 2-bar pullbacks, 2 or 3, and there was one 4-bar pullback out here. So you can see the first one back in the March time frame. You see another one back here in April. Now, each of these black dashed lines, those are the bottom of the TAS market profile. So in each of those instances, so a level of support. Remember I said there's really kind of 3 levels of support we use. We use our TAS market profiles, we use our TD9 count, breakdown, breakout levels, and we use our oscillator on change line, which is not on the screen at the moment out here. So what we know is that yesterday marked bar number 3 of a pullback, and it is not unusual. Yes, much more price erosion than what we've seen in the past, but price has also pulled back on that 3-bar pullback out here, right to that level of support. It's TD9 breakout area. Now, this chart, because I've just got the September contract out here, I'd have to put, and I don't want to mess up all of this just yet, I would have to, if we went back and we took a look at historical, I put the continuous contract out here, what you'd see is in bear markets, okay, which is the possibility that would be our corrective market. So let's not refer to it, as a bear or bull, or in this case, you're a corrective market. What you would see, or in bear markets, what you would see is that just the opposite takes place, where we're looking at 2 to 4 bar retracements. In a bear market, you're looking at 2 to 4 bar rallies. Kind of makes sense? Well, it should make sense. It's simply the way that the markets typically operate out here. And so so this is why I'm suggesting to you to anticipate a 2-day rally. Where price takes us to, we have targets, but then we have to watch short-term time frame support and resistance levels. So hopefully that helps you out with regard to what's going on inside of the equity markets and what to anticipate through the rest of the day, and quite frankly, even into the rest of the week. And so don't be surprised to see the markets rally. They should rally into Friday. Let's go take a look at some of the other markets out here that folks are interested in. Let's go take a look at Goldilocks, see what's going on there with inside of gold. Gold yesterday testing and holding the support level. We're looking at the December contract, panel number 2 from your left. The bottom of that profile is 1920. It's a bullish structured profile out there because the center at 1943 much closer in proximity to the bottom than the top. And at the center of the profile is where you have buyers and sellers. The bottom is just buyers. The top is just sellers out there. Figurative, just metaphorically speaking. No, reality, the metaphor, BS. That's where buyers and sellers reside out here. So we've got a nice little rising trend line that in essence is held the bottom of a box. But look, folks, if price closes below 1920 out there, it's giving you a signal that the A to B equals CD pattern is unfolding. A to B equals C to the downside. So you got to watch 1920. Are we there yet? No. And is it really 1920 as the level that price has to be taken out? Well, not really, Steve-O. It's 1874.20. It's its actual swing point out there. But this stage in the game, you can see Stevie's green line, how it's always acted, how it's not always, but how it's acted as resistance since the top that formed out here. Price likely headed back to 1790, 1831. We can even come up with a figure lower than that. And this is the more likely figure because this would go ahead and get people out of the gold market. And that is that we've got a TD9 count top on the weekly time frame chart for gold. So we just took a look at 9 counts inside the spot volatility index. I'm not sure what else we looked at out here. But here you now have gold trading below Stevie's green line on a weekly basis. And that's at 1964. We're at 1935. That spells trouble. The trouble that spells over time is a pullback to the 1730 level. But look, we've got to go one thing at a time. And the one thing at a time is that gold has held support. And that's 1920. And that is your key level to be watching. In the short term, if we take a look at a 30-minute time frame chart here for gold, what do we have? Not much. I really don't have anything here to report to you on, so we'll just simply mosey along. Mosey along to where? Well, let's go take a look at high-ho silver. Silver has a completely different pattern. Well, not totally different. It's got a bullish structure daily profile. It just happens to have been in place for a longer period of time. Now, typically when you're above the center of the profile, that says you want to go test the top at 30.19 out there. But that's this got resistance, a lot of resistance before it gets there. You're looking at a descending trend line, but before it even gets to that, you've got Stevie's green line, the oscillator and change line at 28.35. So that's your real resistance level out here inside of silver. Silver will just simply, or will likely follow along the track of gold. But silver is stronger than gold. What do you mean, Steve-O? Well, stronger because look at where prices trade on a weekly basis. By the way, this hasn't confirmed sell the D point on a weekly basis, but price well above Stevie's green line at 24.94. That is likely its price target to the downside, or its next price target to the downside. Well, how about light sweet crude? What is it doing out here? Let's go take a look at light sweet crude. Trade out at 34.74. You're seeing a bit of a bounce here this morning. What is it likely doing? Well, price is likely targeting its breakout level. Its breakout level is 33.14. Today is going to be bar number 7 of a TD9 count. So that says the bottom in light sweet crude. If it's going to get to the TD9 count pattern, well, that could form by Monday out here. But 33.14 is a likely breakout target where you might want to consider going long. Light sweet crude. Texas tea. TFNN. Have a great day and a great week, folks, and I'll see you on Monday.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.